In this guide to navigating your paycheck, I'm going to help you understand how taxes and deductions impact it. So let's begin by talking about your offer letter salary. So when you get hired and you start a new job, typically you have an offer letter that's going to state what your salary is over the course of a year. Now, this salary is stated in gross terms, not net terms. So that figure, whatever it is not the actual amount you receive in your bank account over the course of a year. You're going to get less than that due to taxes and employee benefit deductions. Now, digging deeper into taxes, one of the few first forms that you're going to be asked to fill out is income tax withholding forms. And for the IRS, that's your W-4 form. And if you live in a state that has state income taxes, you might have some type of state equivalent income tax withholding form. So let's dig into the steps of the W form federal income tax withholding. There's 5 steps in order to complete it. Some individuals only have to complete 2 steps, but depending on your situation, you may be asked to complete all 5. The first step of the W-4 asks you to put in your personal info. So your name, your address, your social security number, and then your filing status. It's important to note that whatever you check the box for your filing status, that's going to impact how much withholding is done from your paycheck. So if you check the married filing rates, then it's going to have less withholding compared to the single rates. And then head of household is kind of in between the single and the married filing rates. In addition to the personal info, if you have multiple jobs or a spouse that's working, then you can complete the step 2 and enter in the appropriate additional withholding to account for that type of situation. Now, the third step asks you if you have any dependents, if you want to claim any allowances. The key thing to note here is if you claim dependents on your W-4 form, that means less is going to be withheld for income tax withholding, and vice versa. If you don't claim any of your dependents on your W-4, that means more is going to be withheld from your paycheck as far as federal income tax withholding. So this is really important to understand because, again, it's going to influence your withholding and your actual tax liability when it comes to filing your return. Now, step 4 is any adjustment. So this is where you can enter in if you're itemizing your deductions and you want to reduce your withholding, or if you have other income and you want to increase your withholding, or if you just want to simply state some extra withholding from your paycheck. And then the last piece of that would be the signature page, and that's pretty self-explanatory. Now, if you live in a state that has income taxes, then you're likely going to be completing a state equivalent income tax withholding form. Now, this varies per state because, again, not all states have income taxes. For example, if you live in Florida or Texas or Washington, you don't have state income taxes. But if you live in California, you have a progressive income tax rate system. Or if you live in like Idaho, for example, you might have a flat state tax rate. So it's important to understand your individual state tax rules depending on where you live. So that's a little bit about the income tax forms. Now let's talk about FICA taxes. So FICA taxes is broken up between Social Security and Medicare, and then we'll get into the self-employment piece. But let's begin by talking through what Social Security taxes are. So as an employee, you pay 6.2% of your wages up to a maximum cap wage base of $168,600 for 2024. So you're essentially paying Social Security taxes while you're working, and you pay these Social Security taxes in order to get future Social Security benefits for yourself. And you have to pay Social Security taxes for at least 40 quarters or 10 years in order to benefit from the system later in your life. Now, Medicare taxes, on the other hand, are 1.45% of your wages tax. What's different about Medicare taxes compared to Social Security is there's no wage-based cap. So if you're a high earner, there's no cap on the amount of Medicare taxes that you can pay. And then as far as self-employment taxes, it's really important to note that if you're a traditional employee, that's all you pay is the 6.2% Social Security tax plus the 1.45% Medicare. So your total FICA tax is 7.65%. But if you're self-employed, you have to pay for both the employee portion and the employer portion, meaning that your total FICA tax liability is 15.3%. And this is known as the self-employment tax. So it really penalizes people that are self-employed, and you pay the self-employment tax at the time of filing your tax return. So that's a little bit about FICA taxes. Now, depending on what state you live in or what city you live in, you might also face state disability income taxes being deducted from your paycheck, are also locality taxes. So an example would be California. We have a 1.1% state disability income tax where there's no cap on that. And there's other various states that also have state disability income taxes. So again, you'll want to check what state you live in and your specific state rules. Locality taxes are like local earned income taxes, and this varies depending on the actual city you live in. And some of these taxes are flat, like Kansas City, Missouri, or they can be progressive, like New York City has its own progressive local earned income tax. So again, it's going to vary based on the location that you live in. So now let's talk a little bit about employee benefit deductions. So what you want to know here is when you opt into employee benefits, it's going to take a deduction from your paycheck. So the more benefits that you participate in, the more that's going to be deducted from your paycheck, i.e. it's going to reduce your take-home pay. In addition to this, the higher tier that you opt into for your employee benefits, that could also reduce your paycheck. So if you chose the most expensive medical plan, then more is going to be deducted from your paycheck. In addition, say if you contributed the maximum to your 401k, more is going to be deducted from your paycheck. So just really important to understand overall all the types of employee benefits that are going to be deducted from your paycheck and reduce your take-home pay. So that's a little bit about employee benefits, and then let's wrap up with some considerations here. The first one that we've talked about already is your offer letter. So that offer letter that you get, that's your gross salary, not your net. So you don't want to go ahead and buy that really expensive car after you get the new job, because you're not going to be getting that $100,000 annual salary at once. It's going to be spread out over the course of the year, depending on how frequently you get paid, and then it's going to get reduced by taxes and employee benefit deductions. So important to understand. And then the W-4, how that influences your withholding. So like we talked about earlier, if you claim a bunch of allowances for dependents on your W-4, that means that less is going to be withheld from your paycheck. And depending on what else you have within your tax situation, you could have a federal tax liability. So the key takeaway is to be really intentional with how you complete your W-4 and what type of allowances you're claiming, and if you're doing extra withholding or if you're doing less withholding by claiming those allowances. And then the final piece that we already talked about is your employee benefits, how your benefits that you opt into are going to reduce your take-home pay. So it's critical to understand how this will impact your cash flow. Can you afford to contribute the maximum to your 401k based on your cash flow and your living expenses, or can you afford to pay the most for that health insurance plan? Is it in your best interest? Should you pay for supplemental life insurance? Because all that's going to be deducted from your paycheck. So while you're going through your employee benefit elections, make sure you understand what that impact is going to be on your cash flow, and can you afford to do all these decisions based on the fact that you still need money to live on each month. So that's the considerations in a nutshell. Hopefully this was helpful. I did do a deep dive in an article on this in more detail, so click the top right of this video to explore more. But thank you very much, and hopefully you learned something.